Let's go back to the bookkeeping. We're going to teach you how to spend money now. We've taught you how to put money into the company, be it income, loans, or equity. Now we're going to teach you how to spend, and we're going to give you several sets of rules, and we're going to talk about the tax consequences, because that often drives, again, what goes on the books and what goes where. You guys tend to have a hard time distinguishing between expenses and assets. And what's the difference? An expense, from a tax standpoint, is something that you can write off immediately. An expense can be written off immediately. An asset lasts, and you write it off a little bit at a time, over time. For example, a rental house is an asset, and you can write it off a little bit at a time. How much? Well, it's a 27.5-year schedule, which comes out to about 0.036% per year. Now, we're going to talk to you about some tricks to accelerate that and get more money out of the house faster. But by and large, you get little bitty deductions every year for most assets. Some assets, like land, you don't get anything out of until you sell them. No deduction until you sell. Expenses give us a deduction today. So how do we distinguish an expense from an asset? A very simple definition. I'm not going to give you the tax code definition. There are thousands of pages defining what's an asset versus what's an expense. You do not want us to go through that. Trust me. Would the nice lawyer lie to you? No, trust him. You don't want to go through those pages. Let me give you the basic definition. An expense lasts for less than a year. An asset lasts for more than a year. Very basic definition. An expense lasts for less than a year, an asset lasts for more than a year. So for example, a utility bill. How long does that last? Less than a year? Well, that was a trick question, because I'm a lawyer and that's how I roll. It depends. Let me give you more details. It's December 31st in an effort to jack up my deductions, and I pay $5,000 to the electric company. My average monthly electric bill is $100. How long does that last, that payment, if my average doesn't change? Well over 4 years. So is it an asset or an expense? It's an asset. It's an asset. I would have to put it on the books as prepaid utilities, and then as we use it, I would convert it little by little every month into an expense. Now, if I paid $900 December 31st for electric, is it theoretically an expense? Yes. Why? Because it lasts for less than a year. You still may not be able to deduct it all at once. There are other rules. But from an asset versus expense standpoint, is it strictly speaking an expense? Yes, because it gives me a benefit for less than a year. Very simple distinction. But there are exceptions. Always, there's exceptions. Oh, you should not leave things within reach of the lawyer. Oh, it's a heavy pen. This is like high-tech titanium kryptonite stuff. This pen, let's say, is guaranteed to last for 20 years. Is it an asset? So are we going to put it on our books, our $5 asset? No. No. Why? Again, size sometimes does matter. That pen, some of you are blushing, it's so charming. That pen is too small to put on as an asset. We're just going to write it off as office supplies. Likewise, let's say I go buy Rich Dad, Poor Dad, or any of Kiyosaki's other books, which are functionally the same book. I pay $20. Is the book going to last more than a year? Yeah. But am I going to write it off as a probably educational expense? Yeah. Why? Too small. So what's the size? Depending on how you keep your books, and I've changed my number. For those of you who've heard previous recordings, I used to say 250. The IRS just did a massive, major change on its rules. Functionally, for most of you, if it's $500 or under, I tend to write it off. $500 or under, I tend to write it off. There's an exception to the exception. Oh yes, this is the tax code in all of its complex glory. By the way, guys, every chance I get, I vote to put myself out of business. A simple flat tax would make so much political sense. Why is Congress, both sides of the aisle, Republicans in this respect, are no better than their evil brethren? Why do they not do this? It makes so much sense. Power. The ability to grant deductions to favored constituencies gets a lot of lobbying money for both sides. Not a chance in Hades, or not a chance in Youngstown, that they're going to give up that power. None of them. There is an exception to the exception. If you have what's called a listed asset, I want you to capitalize it even though it's under 500. If it's a listed asset, well, what's a listed asset? Pretty much anything you can have fun with. The IRS has a list of assets. That's why they call them listed assets, because they're really creative people. They have a list of assets that basically you can have fun with and they're suspicious about. So we need to capitalize those if they're over 100. So what are listed assets? Computers, printers, cars, cell phones, anything you can have fun with. So what's the rule? 500 or under, I expense it, even if it's technically an asset. What's an asset? It lasts for more than a year. So if it lasts for more than a year, it's an asset. If it lasts for less than a year, it's an expense. If it's under 500, I'm probably just going to write it off as an expense unless it's what? A listed asset. Any listed asset that's over 100, I'm going to put on my books as an asset, including printers, computers, etc. Why? Because my accountant needs to see them. I still may be able to write them off in 1 year, but I need to have them on the books as an asset. How can I write an asset off in 1 year? Code section 179. What does it say? Pretty much anything that's personal property, which most of those things are, can be written off in 1 year if you meet certain rules, which I'm not going to get into. They're too complex. Just assume most personal property can be written off in a year, but it has to be filed on a certain form. And if you put it on your books as an expense, your accountant may not put it on the right form, and you may lose the deduction. So that's my basic rules. We're going to go into other rules for properties in a little bit. How do you put flips on the book? How do you put rentals on the book? Back to the cars. Here's how I recommend you track your miles. You do need to track them. First of all, there are apps that do it. I don't know any of them because I'm primitive. I don't do that. I just write on a piece of dead tree. And still, the old-fashioned IRS agents like that. They get a sense of, you even make it look used, like you put your coffee cup on it and let it stain a little, blur a little bit of the ink, and it just looks so authentic. But I'm not saying lie. Well, you got to give old Slick Willie credit. If you're gonna lie, be good at it. And that guy was good. Well, hey Fred, how you doing? I want to tell you something. I'm not here right now. For God's sake, don't tell Hillary. But you can't blame me, can you? I mean, you cheat too. I'll tell you what. Lately, Madeline Albright's been looking good. But he could tell you stuff, and you'd be, I'm not here right now. And you'd be like, you're not here right now. Fred, these are not the droids you're looking for. But anyway, no, we don't want to lie to the IRS. That's a bad idea. On the car mileage, here's what I recommend. The IRS will take samples. You can pick a few months of the year. I prefer to pick 1 week per month. And I document the heck out of that week. Every mile I drive, I document which business and what it was for. I mean, just totally anal. This is where the engineers and the software people are blessed. This is the good time to look at just the tree and not the forest and do your little thing that you do. You document for a week the mileage, totally anally. And otherwise, all you do is take a picture of the odometer the first day of the month. And then doing math, you can figure out how many miles you drove the month. And that second week, whatever percent it has, let's say it's 77.37, so take it out 4 places, 77.37%, multiply it by the total miles driven for the month, that's your business use for the month. It's a lot easier to do it that way. And I've never seen an agent not accept that. I know it's annoying for that week. By the way, which week of the month do we select? Have you heard me speak before? Okay, you should. You've read my mind, and at least one of us should be appalled. I hope you didn't see everything else that was in there. I like how he thinks. The second week of the month. Why? The least holidays. Right? If you pick the third or fourth week, you got Christmas and Thanksgiving, which will probably screw up your business percentages. So pick a week that favors you, the second week of the month. Little details like that add up. Now, here's how we write off vacations. I go to several places. Among them, I go to Chicago once a year for at least a week. How do you write off trips and meals, and how do you make vacations happen? There are two separate components, getting there and when you're there. Getting there, in other words, the travel cost is all or nothing. You get all of it or none of it. The trip has to be predominantly business. Usually they measure it by the day. There are other ways to do it, but usually it's by the day. What's a business day? You're going to like this. A business day is a day that you work 4 hours and 1 minute. You get to screw around for the rest of the day. 4 hours and 1 minute a day of business makes it a business day. Less than that makes it not a business day. So for example, I go to Vegas for a seminar. I'm in the seminar at least 4 hours and 1 minute a day for 3 days. I gamble and drink and do other sorts of naughty things for 2 days. Is it a primary business trip? Yes. Either the mileage of the car to get there are written off, or the plane flight is written off completely. So you want to schedule your trips so it works out that way. Now, let's say I drove to Vegas. So I'm writing off my mileage. Does it change anything if my kids are in the car? No. So how do we write off vacations? Now for me it's very easy. I speak nationally. I have clients everywhere. You guys have real estate in different places. Now some of it's in places you don't want a vacation. For example, congratulations, your Wichita property cash flows, enjoy the visit. So you go to seminars or whatever else it is you do for business. What about the hotel and the meals? Those can be written off for people who are part of the business. In my case, when I travel to do this, Carolina didn't come with me this week because she's at a wedding in South Carolina, and it was on the beach, and there was a beach house. And she likes the Bay Area, but she likes the beach better. And you can tell, again, the pattern for Carolina is very clear. Where are you going this week? Well, I'm going to Tampa. I like Tampa. I go with you. Okay. So she will network. She gets me clients because she's the nice side of the family. Charming, attractive, networks well, also works for the business, does some bookkeeping, some returns, enough that I can write her off when we go. The kids I can't really write off. They work for me, but not enough to justify them on the trip. Although I bet you my eldest one at this point probably could network really well. So I'm thinking about being able to write her off on trips. So how does that work? The hotel room, I write off what I would have paid had I been alone. I normally stay in a hotel like this. When I go with the kids, we normally stay in a Marriott Residence Inn. It has an extra bedroom, and it's more expensive. So how much do I write off? Whatever this would cost locally. How about the meals? Same thing, it's day by day. The business days I can write off the hotel, the non-business days I cannot. The business days, I can write off the meals for whoever is part of the business, and on the non-business days I cannot. So here's a question. Which days do you go to Morton's? Which days do you go to Wendy's? And it's not a big threshold. I mean, for me, I can work anywhere. Next summer, we're going to go to Chile for 3 months. We screw up the kids' summer. We've done this before, where we go to Chile during our summer, their winter, which their winter is like 60 degrees, ooh, and they're wearing parkas. They're so cute. We put the kids in a school there during the summer, which is kind of evil, but really helps their Spanish. I work off the laptop. I can do that anywhere. So if we go to Chicago, what do I have to do to make it a business day every day? Bill 4 hours a day. How do I do that? I bill it. I send an invoice to the client. That's my documentation. Ooh, a lot of you do stuff that can be done anywhere, I'll bet. The nature of Bay Area work, a little more techie, a little more laptopy, a little more thinking. Okay. So we can write off the meals and the hotels, the days that are business days. And let me give you another little trick. The personal days can be written off if they're on a weekend and it's cheaper to stay. Let me repeat that and then I'll give an example which illustrates it better. The personal days, you can write off the hotel and the meals if they're on the weekend and it's cheaper to stay. Here's what I'm contemplating doing. In fact, I want to get some feedback from you. Kathy and I are talking about doing a full, hardcore, 2-day IRA 401k boot camp. There are 2 ways I'm contemplating doing this. Either a Saturday, Sunday. Okay, fine, that works. I'm thinking of doing the boot camp Monday and Friday and Monday. Why? So that you all stay the weekend, it's cheaper, they're personal days, all you do is gamble and drink, which you can still write them off. Why? Is it cheaper to fly back to California for the weekend and come back Monday? Or is it cheaper to stay in Vegas on the personal days? I can create 2 deductible vacation days for you by having the meeting on Friday and then Monday. Now, from my standpoint, what's the downside? Probably fewer people can do 4 days than 2 days. So I may shoot myself in the foot for the number of audience people by getting you a really cool tax deduction.